Let's look at the balance sheet this way. When the bank started, its assets were only the cash contributed by the stockholders who organized the bank. This was balanced, on the ownership side, by the capital stock issued to the stockholders. Some of the cash assets were converted into a bank building and furnishings and special equipment. The bank was then ready to receive deposits. Here, Nancy Wallace is depositing $5 in her savings account. She probably thinks of this only as a means of helping herself, building up a reserve fund to meet future needs and emergencies by putting her money in a safe place where each deposit is insured up to a maximum of $10,000. Even so, she's helping her bank to serve her community. For she and hundreds of other depositors help to build up the amount of cash which the bank has available to conduct its business. Deposits appear on the other side of the balance as a liability because the bank must stand ready to return an equal amount of money on demand. Deposits in savings accounts are called time deposits because the depositors intend to leave the money in the bank for some time. But most of the deposits are demand deposits, upon which the depositor can write checks when he makes payments to others. Such deposits are made in commercial or personal accounts, often called checking accounts. Frank Hamilton is depositing some money, and also a check, his paycheck. On the deposit slip, the amount of the money and the check are added together, just as though it were all money. And yet, a check is not money. It is an instrument for the transfer of credit, which is a substitute for money. What does that mean? Well, how would you like to have to get up every morning in time to pay the milkman? Does this bother? The dairy sells its products on credit, and at the end of the month sends a bill for the price of the milk delivered during the month. This is called personal credit or consumer credit. But now, Mr. Hamilton still doesn't want to go to the dairy office to pay his bill. So he will mail them a check for the amount of money he owes them. And this is where the bank comes back into the picture.